Happy Saturday, ladies and gentlemen, all in crypto here, and welcome back, guys, for another jam-packed daily market update. This is going to be a really important one because we're seeing some interesting things with mortgage demand. We're seeing a mortgage boom, as it were, following the 25 basis point rate cut, but probably more broadly, the signaling of where interest rates are going to be going. Now, why is this important for us as crypto investors, but more broadly asset investors, or just your everyday individual that perhaps hasn't quite understood the great game, which is money proliferation, which can work against you if you don't have assets, but for you if you do. And I want people on the side of working with the system because I don't have the ability to change it and have that knowledge of understanding it, then against it, which essentially means you just get poorer and poorer and poorer and poorer because they continue to proliferate money, assets continue to go up, the 1 percentile continue to benefit from that, whilst the massive effectively get more and more impoverished. We don't want that for my listeners and for the world at large. We want to help and we want people to understand the great financial game. And what we're seeing with mortgage demand is really a reflection of what we're going to see for assets more broadly. So here I have United States house prices, and we look at the United States because it's the largest economy in the world. It's really can be used as a barometer for the world at large, and we look at the S&P 500 because it's the largest kind of index in the world. If that does well, typically it's a good environment for assets broadly. But what we have here is United States house prices and the S&P 500. And these are perfectly in sync, pretty much. Yes, there are slight blips, like 2008 when they both went down. The dot-com crash was kind of a specific one to the markets. But generally the trend is house prices, and houses can be an asset. They can also be a liability. We don't want to sort of go down that route. And assets are correlated. And they're all correlated to, you guessed it, money supply. These assets are priced in money. If money increases in terms of sort of amount, then it's natural to think that the things that aren't, the assets that are priced in money that don't increase to that same amount, will go up in that monetary term. This is the great game. Where you need to understand this is going to continue. And actually, if your wage hasn't increased at the same amount, you're going to get poorer and poorer. This is why, for example, we see people in the UK having gone from one individual, usually the male in the household, being able to provide, to have a house, to have holidays, things like this, to now those two people not even barely being able to scrape by. And the standard of living or the standard of affordability in regards to assets, houses and such just get less and less. You need to own assets so that you can work with the system, with the top 1 percentile, like this chart reflects. This is total net worth held by the top 1%. And the US M2. These people know how to work with the system, not against it, which the masses unfortunately find themselves on. Investing isn't just about making money. It's about quality of life. That's a powerful statement we don't hear too many people say. I'm zealous on that in regards to I believe that's the case. That's why this whole channel exists. And I think crypto is going to be one of the best investments on a non-financial advisory basis. It's just my own opinion. You don't have to agree with me. That presents itself as far as ROI return today. So in regards to what we're talking about, the great game and how you essentially work with it rather than against it, because I can't change the system ultimately. I can only understand it and show people how to play it. In regards to that great game, I think crypto can sort of move you along the board in one of the best manners. We will cover all the news that sort of took place over the past 24 hours, but this is something I'm passionate about. At the end of the day, you guys have given me so much in regards to where All In Crypto is a channel right now. We've got the #1 UK crypto channel. We're top in the world in regards to a lot of specific cryptocurrencies and content, and that's thanks to you guys. And ultimately, I whether I'm a good person or not is another question. But what I do want is for people to do well and ultimately improve their lives and their families' lives. Because a lot of innocent people out there that find themselves sort of suffering through no fault of their own. And I think if they can understand this system and the game that and the world that we live in, then, I can help. So this is interesting. This is from Bloomberg, and it's from Ben Zigger News. It says, this mortgage boom didn't even wait for the Fed to say cut. The US mortgage market is experiencing a resurgence not seen in years, as a sharp drop in borrowing costs prompt a wave of refinancing activity ahead of the Federal Reserve's widely expected interest rate cut, signaling that homeowners aren't waiting for policy confirmation to lock in savings. During the week ending the 12th of September, total mortgage application volume jumped 29.7%, nearly a third from the prior week, according to the new data from the Mortgage Bankers Association, MBA. That's the largest weekly gain since January and the second sharpest increase since the historic rate collapse during the 19 crisis of March 2020. Now, if there's a mortgage boom taking place, that means there's a demand for effectively mortgages, which means there's a demand or going to be an increase in money creation. And if there's a demand for people taking mortgages, that ultimately means house prices are going to increase. It's interesting, and I've been on the other side when I didn't own property of saying, yeah, house prices, they must crash. They have to crash. Well, what I didn't understand was the money supply and how house prices have actually moved in correlation with it. Just like stocks, people talk about stocks being overvalued. Overvalued in regards to what? Money, which continues to inflate. In fact, they've moved perfectly together. They're keeping up with it. So I don't believe that the great game, people have got this, I'm on the 1% in regards to the 99% of people that believe that whoever it is that may be orchestrating events, and we know that people have orchestrated events for financial benefit, this is not a conspiracy, this is something that there's evidence for, everybody would agree with that, right? It's history. In regards to people believing that they are going to crash, there's going to be a great leveling that occurs. The mother of all crashes. Christine Lagarde was talking about the next financial crisis just yesterday in relation to technology. They're adopting blockchain. People think that's coming. I don't think it is. Yeah, we're going to have crashes, we're going to have booms and busts along the way, but I think the great game is continued proliferation, and what that's going to create is a class of haves and have-nots. And the majority of people are going to find themselves on the have-not side of things because they don't understand the game and how to play it. And the game is to own assets, not worthless fiat. Robert Kiyosaki's been calling for a great crash for a long time. I think Robert, you have to give a lot of credit for in regards to Rich Dad Poor Dad, some of the amazing things that he's done in regards to education. And certainly one thing that he understood about cash is trash and owning assets. That great crash, though, is where I differ with many people. I don't think they need to crash the system. They just need to continue to inflate it. And they'll get the haves and have-nots out of that. And if you don't own assets, ladies and gentlemen, you are on the road to serfdom. You are on the road to being a have-not. And it will get to the point where things like UBI and you become very... And we've seen a sharp increase, certainly in the Western world, in regards to a dependence on state. Some people are happy with that. I'm not debating whether you should or shouldn't be. But you need to decide whether that future is for you or not, a dependency on the state. Because the affordability to actually take part in assets is only going to diminish, as we've seen thus far represented through the housing market. So to come back to the topic that I started on, seeing a mortgage increase in regards to demand. This is ultimately, I believe, going to lead to an increase in housing pricing. Houses will continue to go up as long as the money supply goes up. They're correlated. That's what drives prices for assets. All assets are effectively, in some way, shape, or form, yeah, they have fundamentals under the surface, but Bitcoin's whole thing, and it was genius, really, was to essentially create something that is really a bet on dollar devaluation. Assets more broadly are that. Everything could be looked at a Bitcoin in that regards. Some things are even better because they ultimately have maybe some sort of earned potential underneath or under the hood. But as we see that house price increase, as we see mortgage and money creation increase, we're going to see house price increase. And this is more of a broad barometer, taking away all the sort of life lessons for the S&P also moving in sync and continuing to move in sync with it. Now, we already think the S&P is going to do spectacularly and has already had its bear market. And the S&P moves directly with money creation, which is going to be increased with mortgages, but more broadly debt creation. And the top 1% of individuals, this is total net worth held by the top 1% in black, and look at US M2. Wealthy individuals understand this game. A lot of people don't. They deliberately don't teach you it in school for a reason. Because I'm trying to think who was it? Was it Henry Ford that spoke about? It could have been one of them. Was it JP Morgan? It was one of them that said it's a good job people don't understand how the money, how sort of finance works, because there'd be a revolution by the morning. And we're not calling for that, but we're saying, education is key. Knowledge is power only if you apply it. You know, I know so many knowledgeable people, but they haven't done a lot with themselves. You need to apply it. So this is really interesting to take away the kind of life lessons and the rant away from it. Really what this is representing is a demand increase for assets, money creation. And I think that given the correlation between house prices, money creation and the S&P 500 kind of backs our thesis that the S&P 500 has a great time ahead of it. We believe the S&P 500 has had its bear market. Markets more broadly have. That's the sort of Trump crash. And actually, I also think that Trump crash is the yield curve playing out that people are still waiting for. It's remarkable how economists and sort of market analysts really do just follow the herd. And I get it, you know, they've got busy lives, et cetera, so they might not have the time to sit and think about things. But it's a different game that I think we're looking at in regards to the one that the many people are. And I think the yield curve's played out. I think we've got really bright days ahead of us. The Russell 2000 we spoke about yesterday just broke out into new all-time highs. You know, we think this has got really sunny days ahead of it in regards to this sort of cup and handle. A lot of people looking at the cup and handle pattern that we've been looking at for months on the totals, so on and so far. Subscribe to the channel. You're going to be early to what other people see later on. And we looked at this falling wedge that we got perfectly right. This is now completed. That could filter into a handle. Now we're getting that. You know, not only are we bullish on the S&P 500 in the markets more broadly, and we're seeing things like mortgage demand kind of confirm that. We're also very bullish and have a lot of reasons to be bullish on the crypto space, of course, with fundamentally what's going on top of everything. And let's talk a little bit about fundamentally what is going on. Today's or last week has been a great week for a number of reasons. Certainly, we've got that blanket kind of statement in regards to crypto ETPs. Before we do that, there has been apparently a new Trump Federal Reserve Board member appointee. We looked at this, Stefan Miran. He actually was trading FTX bankruptcies. So he's a crypto guy. He spoke about a third mandate. This is interesting. And on Monday, you're going to get a speech which could fuel the rallies that we're looking at, that is essentially going to explain his call for drastic rate cuts on the dot plot. Let's listen to what CNBC, or he had to say on CNBC, before we dive into some juicy crypto news.
You weren't just an outlier on the voting, but also on the dot plot, which we got. And we made a graphic of just how the dots look. Most of them expected either one more cut this year or two more cuts this year. And then there's an outlier, that bottom dot that wanted to see 5 cuts this year. Was that you?
That was me. And let me say something very clearly. This coming Monday, I'm going to be making a speech where I'm going to give a full accounting for my economic views and walk through in meticulous detail the economics and the arithmetic behind getting to those numbers. And it's too big for, people usually write these dissents, and the dissents are, like a page long, right? I'm going to walk through a lot of economics and a lot of arithmetic and a lot of math, and that's going to take a full speech to do. So we're going to get a full accounting of that on Monday.
I'll, of course, cover that on Monday in relation to some of the things we're saying. You can imagine we've had 25 basis points, even pre that mortgage demand started to uptick. We'll see. I don't think the Fed should rush for rate cuts because it might panic markets, and rate cuts in a measured manner, i.e. they don't need to come and race to zero because of a catastrophe, I think can support markets, not work against them. Let's talk about some crypto stuff. All of this, of course, has relevancy to crypto as the kind of beta asset, the fastest moving asset, I think, or going to be one of the best performing assets as far as ROI, given its role in the world. We'll look at an IMF paper. I think shout out to Smoke, covered it or posted it. That's where I first saw it. This is from El Naturet. New Senate Dems say they want to work with their Republican colleagues to move forward quickly on bipartisan crypto market legislation. Last week, we released a framework on the market structure legislation, highlighting our desire to work on this issue. As we stated then, digital assets are a $4 trillion global market that will require a considered and bipartisan approach to regulations. We hope our Republican colleagues will agree to a bipartisan authorship process, as is the norm for legislation of this scale. Given our shared interest in moving forwards quickly on this issue, we hope they will agree to reasonable requests to allow for true collaboration. For this process to work, it must start from a place of mutual understanding. We look forward to engaging with our Republican counterparties in such a manner. And the SEC, of course, have published something pretty huge We know they're working with the CFTC. Yesterday, you did have the launch of Grayscale Digital Large Cap Fund as an ETF. They're now calling it the CoinDesk 5 Fund or something. This, along with other ETPs we looked at as a bullish barometer for the space as a whole, it says GDLC, the first spot crypto 5 basket ETF, did 22 million on its first day as an ETF. Really solid. The Dogecoin ETF did 12 and the XRPR did 15. All of them crushed at the average ETF launch, although far cry from Bitcoin. We did say that it would probably beat Ethereum, the XRP ETF, but not Bitcoin, I think. If you had a BlackRock filing, I think you'd have seen some remarkable things. Whether we get that or not is still to be seen. We have spoke about Robbie Mitchnick's connections with Ripple. Got to be happy with that if you are those issuers. And they're all relatively small issuers. This is the new chart. Obviously, our old one has kind of been done away with, as it were. Smoke, you all know who Smoke is. I've had him on the show for a number of times. Shared this really interesting article. And it is from the International Monetary Fund. It says, global cross-border payments, a 1 quadrillion evolving market. Talks about ISO standards. It talks about with crypto payments. This is interesting because it talks about crypto's sort of role in all of this. Highlights a lot of different things. I'm going to do a longer video on this. Talks about ISO 20022 standards that have provisions for crypto. I will do a far longer coverage of this. As it relates to the crypto space, we sort of covered it. We've got every technical reason to be extremely bullish. Yes, there's frustration. Bear in mind, we're still in September. September's always a bad month for the markets. We've got October and Govember ahead of us, as some individual called it on the channel the other day. So shout out to you. We're going to be using that. It's a bright future ahead of us for those that understand the great game and that are on the right side of it and positioned to benefit from it. Doesn't mean that I'm for the system that we have. I don't know that Nirvana's for this world. It just means that I understand it, and if I can help in whatever way I can sort of alert people to it and benefit from it, then that's exactly what we're going to do here on All In Crypto. I'm going to love and leave you all. Thanks everyone for watching. I'll see you all in the next one.